Hi guys, thanks for tuning in to another episode of Nuggets News. Today I've got a very special guest. I think this is going to be one of our best ever episodes, so no pressure, but we welcome the CEO and co-founder of Unchained Capital, Joseph Kelly.
Hey,
Thanks
Alex.
so much for joining us, mate. I've got a long list of questions here, and you guys have been so busy over the past 12 months, all the way through to the future of Bitcoin and can Bitcoin be an interplanetary payment system. So, for those that haven't followed the work at Unchained Capital, what's your background and what do you guys do?
Shoot. I've been an entrepreneur really most all my professional career. I moved to Austin to kind of really start companies. A slight detour through college, but left that pretty quick. And I met Drew early on because he was in the physics department at UT. He was working on a PhD there, and I was pretty interested in kind of complexity theory and the kinds of stuff he was researching. He and another guy there had a pretty cool data project on the side that they wanted to turn into a company. So we partnered on that together, and that just goes to say, and Drew and I have been working together for 10 years. We both think differently, but complementary about certain things, and haven't been able to get Bitcoin, out of our brains really since we first learned about it. He before I, but really after we bought some of our first Bitcoin in 2013, we thought about how there's not a lot of financial services or a lot of services for people like us who take Bitcoin seriously, think about it as something we'd like to hold for all our lives, kind of a thing. And and by then even it was like a $10 billion asset class on its own, which sounded like big numbers to us. And so we thought hard about what kind of models to start, where to focus our energies, and looked at this kind of lack of financial services as a big kind of obvious gap. With a real market too, we try to put data behind it. With our first company, we learned what kind of pivots can be like as a business, and now you have to be prepared for that if you need to do it. But to try to get things right from the start, we focused on like a client segment we thought that we could quantify and have a real basis for. And we actually published some content about this on our blog. You can find our HODL Waves post from last May, where we look at the kind of cohort of Bitcoin out there based on its age of last use. And you can say that pretty definitively, like today, even still around 60% of all Bitcoin hasn't moved in 12 months or more, which was true back around the time we were looking at it, and it's since varied. At times it's dipped to maybe 40% or so,
Yeah.
but in some fraction that's lost. But to us, that's just represented from the early days. There's an interesting opportunity to wonder who are those people, what kinds of products and services would they like to consume or use with their Bitcoin, and how can we provide it to
I'll
them?
certainly link to some of that research in your websites below. And for those at home, I think we had a cat eating some food in the background and some police sirens, but I think we're all good to go now. One of the things that I really loved the other day when I was doing my research about this was back in 2013, and I'd almost forgotten about this when you had to download the Bitcoin wallet, and I think it was just called Bitcoin Wallet, and you installed it, and then you had like a wallet.dat file on your computer, and just learning how to use all this stuff was just so crazy. It was really so early on, but even where we are now, the other day I was working with a high net worth client and setting up the ledger, and it's still so clunky. It's still really hard to do, isn't it? And what you guys are trying to roll out is that next wave of custody. Insurance is booming at the moment, but some people are just never going to want to hold their own keys, are they?
Yes, definitely. There's a constant trade-off among kind of security and convenience. The more convenient things are, the sometimes less secure they are, but vice versa. And then there's always degrees to those things. And so, um, but we do find that I think as people mature in Bitcoin, or as they tend to hold it longer, and as they become attracted more to the ideas behind Bitcoin, and like kind of have even shift their values or just reinforce maybe values they already had. That idea of holding your own keys, and that is a source of trust and greater faithfulness, and like the security of your what might be your family nest egg or something like that is important. And then how to evolve the tools to make the highly secure solutions that are available inside of a Coinbase or big companies like things like multisig
Mm.
that traditionally kind of very enterprisey um, uses or models, just because of how complicated they could be and hard to use, are now becoming more consumerized as ourselves and other companies are working to have easy to use tools for those ideas. Um, so yeah, there's always some nirvana of like as easy to use as the easiest thing you can think of, well, as secure as possible, but it's kind of interesting edge. For me, it's like investing. I think, risk and security is in that same category of investing is like there's never one answer that works all the time, or like there's never one. If you knew how to make money every day at investing, why are you selling a newsletter, or things like this type of idea. And you do depend on experts and like different voices to kind of give you ideas and models and perspectives to then balance against what you're integrating. But yeah, I think about people who are risk security officers are also very much like investment potential professionals. And,
Yeah. Yeah, I was going to say, for people at home that want the plug and play, where you just plug it in and it's all set up for you. Again, think about how easy that would be to hack. So that's why there are these trade-offs between security and difficulty of setting up a wallet. So we've come a long way since the old wallet.dat file that we used to have on our computer, and most people are pretty familiar with the private key that lives on the hardware device now. But we've got multi-sig technology where multiple people have to sign a transaction, 2 out of 3, or 3 out of 5 to give it more security, like we would at a board meeting. And we've also got these secret sharing or sharding, breaking up of the private key into pieces. So what are some of these latest techniques in security? Do you guys use all these? Could you explain that for people at home?
Sure. So I think some things really stay the same in security, and how you especially model kind of Bitcoin security. And so the ideas of taking things offline, putting things in cold storage is it's kind of something that's like always been relevant, and that's one of the principles that Harvard Wallet helps you take advantage of. And so when we're trying to do things like secure Bitcoin, or secure our key, or secure basically a key that's used in some multi-signature fashion, we're trying to take advantage of taking things out off of any internet connected computer. And then one of the other principles that's happening that you're alluding to with the idea of multi-sig is splitting out the concern, splitting out the key material, or in such a way that there's not a single point of failure. There's not a risk of just if one thing goes down, the system's more resilient. Others can take its place, and that you need more than one to actually be effective. And so I think just when you think about things like smear secret sharing, these are just using that principle in a different way, using the splitting things up into multiple pieces. And then does have its trade-offs. Sometimes in a smear secret sharing scheme, you have to relocate all the key material into one place and point in time. So that might be a dangerous moment when now suddenly in the universe is one place, one artifact that could be used to spend the Bitcoin, instead of in multi-sig. You have the advantage of each key gets assigned a piece of a transaction individually, and then you combine the individual like those signed artifacts together into a spendable transaction. But then on their own, each of those only partially signed things are not sufficient to spend the Bitcoin. You need multiple of those.
Yeah, I mean, I've also read about other things now, and I'm not sure if you guys are using these techniques about, geolocation. So you can only send a transaction out of this wallet address if I'm in this location or from this IP address. Biometrics these days, we've got the fingerprint, retina scanners on our phone. Do different people like different options, or are you guys sticking to one model of cold storage and splitting up the keys?
Yeah, I mean, that's one of the other things is models like that, biometrics or other things. And the thing to be cautious of it, those still exist in layers on top of things. And
yes.
So what if there's a root level to the thing that can bypass the eye scanner, or this thing is protected by just a password. Password 2FA is a pretty dang good standard for any kind of web login. Like, don't get me wrong. Like, but then there are ways that the two-factor auth gets man in the middle or something like that. Or what if the server's logic around two-factor authentication gets shortcutted somehow, and so people just kind of get beyond that. So how's the security really enforced?
Yeah, and that's a point for people at home. I really want to get that through, because it doesn't matter if I have a retina scanner, if it's written by a really basic program, and someone can just hack my phone and click the all clear, that as in yes, their fingerprint or their retina got scanned and it's okay, and then access your Bitcoin. So it doesn't matter how fancy the technology is, if it's not well written code or how easy it is to access.
Yes, yeah, 100%. And that's where in our business model and our technology, and where a lot of our security ethos has come from, is then to skip as many of those layers as possible and live as close to the Bitcoin kind of protocol. It's Bitcoin protocol is some pretty dang good security. I mean, it's a really good bogey out there. If you could hack Bitcoin, there's $180 billion of value potentially for you to capture. So, and that security model then depends on some really hard like cryptography and that same key signing mechanism that's going to support it in multi-sig. And so, Schmear sharing schemes on top of that are just ways to maybe greater complexify or within this particular use case do something different. But if you're just somebody who can keep track of a hardware wallet, keep track of a couple hardware wallets and the administrative pieces around that, using multi-sig, using a solution like our Vaults product, for instance, is we think the safest way to protect your Bitcoin for any kind of individual use case, or in many businesses as well.
And do you have any thoughts around the argument about a payment system versus a store of value? And as we push these things into cold storage and offline, they're going to be used every day less. Or do you think money needs to be a good store of value before we have these payment systems? And I know people have spoken about things like Ethereum and being able to, borrow DAI against it. I foresee that coming to Bitcoin one day, so you can kind of borrow against that store of value that stays in cold storage. Do you have any thoughts around all that?
Yeah, I mean, I think to your DAI example, I mean, you can do that today with Unchained Capital as a solution. When you take a loan from us, your Bitcoin goes into a multi-signature address, and of which you can elect to hold a key. So you've got some of that same really hard cryptographic evidence of I am one of the three necessary keys to spend this collateral. Unchained Capital is the other, and we have a key agent as a third. And that during that time, it's capital at rest. It's in cold storage. It's not going anywhere unless some default or the loan gets paid off, something like that. And so I think Bitcoin has that already, and I think to the kind of monetary type questions of between it as a store of value or a payment kind of idea, I think you really get long term. You get to have both, and that's some of the model of financial services we work towards. That Bitcoin doesn't always have to move in whatever transaction that's taking place. You can just kind of move contracts between participants in the multi-signature quorum that's protecting that asset. So you can really, and which is kind of how a lot of financial system has worked in a strong way, is also just divorcing like how it's maybe held versus how the contracts and agreements and whatnot take place between different companies or people's ledgers. But you can also enforce that more through multi-sig, as you have different key participants or key holders that in a way function like a smart contract. Like in our scenario for our loans, where we have this key agent, this is an outfit that's all full of attorneys, ex-custodians, executives from BNY Mellon and folks like that, who specialize in interpreting contracts, interpreting when events have occurred and when like what these parties agreed to initially. They said the default event happens in this type of an instance, and so we sign we produce a signature for Unchained in that kind of event. And so it's more of a really like mushy, like real world smart contract versus like a more like a fully programmed kind of bot thing, which I think are really cool things. Makers, without a doubt, one of the coolest projects within cryptocurrency, and may long live the DAI kind of a thing. We don't depend on it as an institution or anything like that, but I hope some version of it can be successful someday.
Yeah, and just on that point, you're talking about how transferring a Bitcoin from one person to another, if we transfer the ownership of a multi-sig private key, that doesn't appear as an on-chain transaction. So I know you guys love the data side of things as well. That's definitely changing, isn't it, with realized market cap on-chain transactions versus things like passing the private key along to another owner and OTC desks and that type of thing.
Yeah, you're right. It doesn't have to move it, and I think it's just different. It's kind of a different way to supposedly build on top of it. That it's probably safer. It's safer to not have to move Bitcoin. That there's always risks to show up. Did you send to the right address? Did you leak any key material when you signed? So that I think it's and I think for me it's a better world, that at least when it's a more kind of meshed financial ecosystem that's also highly auditable. If you're the key holder to a multi-sig address and it, you can always check that the stuff is still there. So if you're worried about rehypothecation
Well,
and who's
that
solving things like
that
that.
was my next question. I listened to a really interesting interview with Caitlin Long the other day, and she was talking about how,
Mhm.
yeah, big money, smart money, they don't just jump into this sort of space until they have all the the legal side of things sorted and ownership. And she raised an interesting point about maybe using shares as a comparison here. If I own some Apple shares, do I truly own them, or do they belong to the bank or my broker or the company? And along that chain, when something happens and they go insolvent or someone gets hacked, who's the owner? On a similar line with Bitcoin, you're saying, well, if the insurance and custody side of things is booming, but particularly with the lending, if I own a coin, I lend it out to someone else, do they now have a claim over that coin? And then are we going into the space of gold and multiple claims over the one bar of gold in a vault somewhere? Do you have thoughts around all that?
Yeah, I think it's interesting. Coming not from like I didn't grow up working in a bank or financial services ecosystem, so kind of coming at it, starting a startup, you do kind of get to see or feel like you kind of understand. I see how that evolved that way. And like one example for that is the rehypothecation of these
Mm,
assets, where we've lent out tens of millions of dollars, and in terms of as we do that activity, we are also sort of have rights or have access to the collateral backing those loans, which then numbers in those tens of millions as well. And now that stuff just sits there, and that's like contractual what we do. That's like our model. We don't do any rehypothecation. But oh geez, as a path to growth, or oh geez, as like a path to more revenues, like that's what mostly. What if I was just lending it out the whole time, kind of a thing. And so my incentive to now think that way, and just as a business, like that's a really very earnable revenue stream that can exist on doing that. And so to just be in that position as kind of an entrepreneur and operator, and just see like what that lever looks like to want to then go do that for our benefit, hopefully everybody's benefit if we did it.
I,
It's very real. And the fractional reserve banking, like lending out more, it totally makes sense why there's
Well, I was
a
going to say,
economics.
for people at home that are maybe starting their journey down the rabbit hole of how money works, what you just described is what the original bankers did back in the day when they've got this gold sitting there and they think, oh, geez, very few people ever actually come in to get their gold, so I'll start lending it out to everyone. And as you say, you guys could be making 10 times more money doing fractional reserve systems, but I guess that's what Bitcoin is trying to avoid altogether, isn't it?
Maybe. I mean, I think there will be always be some fractional reserve, or and I don't think Bitcoin has to succeed in that goal to be otherwise like super successful. Or I just think there's a price to everything, and I think that activity can be
Mm,
risky. Therefore, it should carry like higher you know returns to it in some level, and then there's going to be lower return but less risky kinds of things. And
yeah.
so Bitcoin hasn't been around long enough, and there hasn't been like Bitcoin banks doing that kind of activity long enough to like see those runs or see those knock-on effects of how a couple of bankruptcies or defaults, big defaults would work.
That's really
Um,
interesting to hear you say that, because I'm very like passionate about the whole no rehypothecation thing, and we have the know your keys, no, not your keys, not your coins. So yeah,
mhm.
when you say maybe a little bit's all right, how would that work? Is that required for lending coins and credit, or why do you say that it's not necessary that we have a one for one backing in everything we do in the ecosystem?
I think it would just be really, because I think on the edges, on the margin, there's too much incentive to not do it, and or to do the rehypothecating, if you will. And so um, it kind of needs to live in like I think in a balance with the other approach, the other way of doing things. And I think um, what you have, think that's I think in a healthy financial system, you have places like insurance companies, like just even governments. Ideally, there's like super long term capital. Yeah, always sitting on or near or next or close to the assets they're supposed to have, or and having this kind of clean look through to real non-hypothecated
Mm,
assets. And then kind of maybe the further and further you get away from that, that's leverage. Now you start to leverage things that like don't exist, or something you owe somebody else.
yes.
And that's also, I think, a little bit of leverage is always. I don't know any economists that say no credit ever,
Mm.
please. But so there always have to be some form of that is in my mind. And I think there are safer ways to. That's where we look at real lending that works more in this kind of the multi-sig fashion I described, should be more the safer kind of form of lending instead of just writing you the equivalent of a check or just sending you my Bitcoin and then that it hopefully coming back to me
I guess
with some interest.
in my mind, I guess that can work where people would maybe lend out their Bitcoin and we have sort of Bitcoin based loans, but I think we'd see realistic interest rates. So people would correctly price the risk of paying back that loan and whatnot, unlike what we see now with central banks manipulating interest rates.
Exactly. It'll be more free market set, and you do need time for people to learn how risky that behavior is. And I mean, if you look at the ecosystem around the Bitcoin lending right now, I mean, interest rates have really come down. I think there's a lot more supply of Bitcoin out there that is available to lend. You've had platforms that have raised Bitcoin from consumers. You've had a lot of institutions playing it, large desks like a Genesis. And so as that Bitcoin's come to market and it's been borrowed, and now more of it wants borrowers, rates are in those low single digits, mid to low single digits. That I don't think really prices appropriately what it can look like to get that.
So yeah, we're talking just before about the possibilities to increase your revenue streams by doing fractional lending. But one question I did have that we touched on in the pre-interview was why not go into other coins, other assets, whether it be Ethereum or for you guys, is it just the focus that we're so early on, there is so much to do in Bitcoin and so much to service, pardon the pun, that this is the mainstay of what you want to do?
Yeah, great question. Mentioned kind of coming up like levers we can be pulling as a business and ways to try to grow and expand. The idea of multiple assets is one of them, and something we talk about a lot internally. I mean, from a values-based perspective, from a market opportunity and business sense, like strategically, also costs and operations. What does it take to support multiple assets? And I think from a couple of those perspectives, the Bitcoin ecosystem is still the largest in terms of asset value, and so that's where the most kind of clients are that we might want to help service as a financial services provider, and then from a values perspective, we value the technology itself, and we value kind of delivering it in a principled manner, and so to do that costs a lot, at least from like a technology integration point of view. And so to support multiple currencies, I mean, there's a reason why BitGo exists and can do that, and then other companies exist that will just take advantage of that infrastructure and do loans or do other things, but they don't deliver those services in a way that always like rings true for for instance, the segment of the market we service, or the way we can instead integrate with your hardware wallet instead of like give you a BitGo kind of experience, and I think there are other solutions and things out there being tried, and ecosystems like Ethereum and whatnot that deserve their own credit and kind of space to run. So yeah, we're enjoying ourselves. There's a lot of hay to be made in just Bitcoin itself. It's got a lot of legs behind it, and real cryptography, real security too. That I mean, I can't there's real great engineers and people that concern themselves with Bitcoin. And when it comes to money, you want that provable, assured, super safe and secure thing, and so that's also part of the values and why we support Bitcoin today.
And in terms of insurance, we've seen Lloyd's of London and these reputable people jump into the space. So are they the leaders, or who else are the leaders in this space for you? And are they a lot more comfortable, with Bitcoin than saying going into Ethereum or, maybe some other digital asset altogether, and they just don't have the same level of certainty around the security and cryptography around it?
Good question. I mean, yeah, certainly Lloyd's is one of the probably the largest kind of like underwriting sort of body for policies in the space. And I have heard that I think there's a few other folks getting into it. They don't know off the top of my head. And it's not clear to me how much their diligence includes the idea of like your other assets. Yeah. But it does start to get dicier because you can't just get the same guarantees. There's not the same amount of infrastructure. That's when we supported Ethereum, we released our own smart contract to do multi-signature storage for it. There were none that really existed, and to that point that did things in the way we were comfortable with. That could again rely on hardware wallets and multiple of them being required to spend it. And Ethereum has this thing, almost an embarrassment of riches. So many different ways you can express a multi-signature contract that, as you've seen, there's been hacks as a result of that kind of greater expression. So there are real risks there, and we have found, the insurance people we talk to are sharp. They've done their homework. They've like brought out pencils and written some policies on this stuff. So they know exactly what cold storage means. They know these bits and pieces. But I do want to believe like you would get out on a pricier curve with them depending on the more assets you're supporting.
I tend to agree there as well. So the next thing I want to talk about was a fantastic piece that was written about Bitcoin possibly being an interplanetary, interstellar payment system. So this was pretty technical, but the basic idea for people at home is that you think about hash rate and hash power, and you need to capture a large amount of energy. So then you start to say, well, which planets are literally close enough from the sun or too far away where they wouldn't have enough sunshine to be able to have renewable energy to have all this hash power, and then the difficulty would be too high for them to mine. So this really blew my mind a little bit. It's something I've thought about. But do you have any thoughts around that? That's very exciting to think about.
Yeah, it's super fun. It's one of the benefits of kind of working with Dhruv, or these just fun kind of speculative thoughts that'll go into. He was the author of that piece. And yeah, I think it's interesting to have those kind of thoughts about something like Bitcoin, because on the one hand it can feel impractical, but it really pushes the limit of like how to understand what your own understanding of the thing is. And so he came at it from this point of view of you have to deal with the speed of light, that like as a practicality, nothing we know of can go faster than the speed of light, and so it's a pretty hard limit. And if you're needing to transmit block details from a blockchain from somebody on Earth and to somebody on a Mars colony, there's a time lag there. It averages about 20 minutes, 22 minutes on a single trip for a beam of light. And now the Bitcoin's block time averages 10 minutes. And so, geez, you might be 2 blocks behind at any point in time. You're suddenly like getting information about that thing. So, but these are also ranges. That's a 22-minute average for Mars, and it's only 10-minute average for Bitcoin. And so, hey, if you didn't know that, like, that's when we start to open that box of detail and knowledge. And so, Drew's post, it's both also even political. Gets into there's a forecasted uprising on Mars, as Mars says, guys, screw this Bitcoin thing. Like, we don't have enough mining power representation. We don't have enough, no hash power, no representation. Like, you can picture all these these revolutionary slogans. So they decided to fork off and start their own coin, kind of a thing. And so then now they have their own dynamics of like, well, shoot, if we start our coin, if we're not big enough, Earth could we call it send a hash bomb, send a bomb of hash power that basically like just mined all the way ahead of wherever their chain is, kind of a thing.
Similar to what we're seeing on BCH at the moment, by the sound of things. Yeah.
Exactly. Yeah. They might get hash bombed, and so these ideas are definitely quite fun. It makes some people around the office kind of grumble or about this. Can we get work, guys? But
I'm definitely going to write a piece up on that at some stage myself, because I think it's absolutely fascinating. So, any final thoughts for people at home? Are you seeing a different range of client come in? I know personally we've really noticed more baby boomers that are now comfortable with this technology, and compared to the average guy that was really having a punt and speculating in 2017, the mature investor that's been through maybe a few market cycles now in the real world, and they've seen the importance of gold over the years, and they're starting to understand Bitcoin scarcity. Are you seeing that sort of thing change as well?
Yeah, I think our clientele tends to be they're not usually people who like are buying Bitcoin right now for their first time. In many cases, there are people who have held for 2 or more years, so they've kind of graduated to some of this idea of multi-sig, or and why things like that might be important, or they're settled in, they're long-term holders, and so now they look for financial services. But a lot of the things we do is we do spend time kind of on the road talking about Bitcoin. We've got a big blog series on economics behind Bitcoin, authored by our head of business development, Parker Lewis. And so I think things like that are catching people's attention, especially in just that there's a macro, weird macroeconomic world we live in, and the internet and like YouTube educators like yourself, like just the speed with which and ease with which good information can be transmitted is only helping to, I think, just clue people into, if not always Bitcoin or cryptocurrencies, like some of the values behind them, and so just gives people more of a proclivity to pay attention when it like crashes again and then but doesn't die. Often it's usually what can kind of convert people. And so that as I think just older individuals and especially family offices and institutions that think about these macro issues and issues with the fiat currency system that might not rub them the right way anymore. I think Bitcoin and cryptocurrency still are showing increasing promise.
And personally, getting away from the monetary side of things, are you interested in Web 3.0, Ethereum, or other platforms? Do you think something like basic attention token makes an interesting case in the advertising space, or these little niches that blockchain is trying to disrupt, or is really your personal focus as well as business focus just Bitcoin?
Yeah, I mean, I think that stuff's really cool. I mentioned Thinking Maker and the DAI is also really great. I think too much of the attention is drawn to those things as financial assets, however, and drawn to that, and it's almost it's a double-edged sword that these things become like instantly tradable on exchanges and markets. If they were just like Bitcoin early on, I'm just like this kind of weird like collector item almost, or like just like a cool thing, like those projects would be almost so much better off, because we'd know what had like sticking power and what like was kind of being used or actually flowing within communities.
Yes.
So I mean, I think there are projects like that'll survive despite the hugely speculative activity that happens around them. But I think that kind of distracts. And what are those cool ones? I mean, I'm unfortunately not going to spend as much time on them directly, myself. Yeah. But I like many things that are being tried.
And do you have any thoughts around the halvening? I know people hate to give price predictions, but I used to be one of those people, but now I'm more comfortable. I've done a few predictions over the years, and they've normally been way overshot because of how big the price explosions have been. But I seriously think now that when we look at what's going on around us with currency wars and devaluation, gold's market cap, I easily think that we can get to 100K. And whether or not that takes 2 years or 5 years, to me really only depends on regulation. If the G20 come and crack down on everything, I think unless governments become more fiscally responsible or we go back to some sort of gold standard, it's just a no-brainer that something that's comparatively scarce is going to continue to accrue value.
Yeah, I mean, and I think just through inflation alone, as long as I keep printing currency, 100K Bitcoin could mean like $15 gallons of milk or something, and like $20 gallons of milk. Yeah. So there's things like that, but I was going to make a joke. It's not just the moon, man. It's Mars. Bitcoin's going to Mars. Yeah. I think it's one way we look at it. So I couldn't name a specific number, but I think like 100K is not crazy. And whether it takes one happening or multiple to get there, I think we were surprised that it got to $10,000 as soon as it did, just from starting a business in the space. We're like, that happened way fast.
Absolutely. I remember ETH at like $5 or $6, thinking if this ever hits $100, I'll be over the moon. And 12 months later, it was at over $1,000. So you should never underestimate in this space. But Joseph, it's been fantastic, mate. I'd love to have you on again in future, and I'm sure you guys are going to continue to push the boundaries of what's going on in security and whatnot. So, any final thoughts for people at home? I'll put all the links to follow your work down below as well.
Yeah, appreciate y'all checking out, hodl on, and to put the right level of scrutiny on things, and so help make the world a better place.
Awesome. Thanks for joining us, mate.